Hey there traders, welcome back for episode 20 from the StockBandit.tv, the home of trading videos which make you better. It's a free educational site offered by the StockBandit.com, and more of you have been discovering us lately. So if you're new here, welcome. Now I'm sure glad that's the case and that you're finding the videos helpful, and of course that you're here for this episode. Alright, so call it a Steve Nash market. You know, it's head fake city out there, and just when you think this market's going to go one way, it can turn on a dime and leave you looking like a total fool if you're not willing to switch gears. Now today we saw some head fake moves as support zones got broken, only to be soon followed by a big swing in the other direction late in the day, which erased those losses that we saw earlier in the day. So since it's still a range-bound market, especially here in the near term, it really is a reversal prone market, and so that's something that we've got to be aware of, and that means that head fakes are very prevalent anytime you're in a range bound market. So let's take a look at a couple of keys that can help you out when it comes to being a little bit lighter on your feet, and that way you know what to be placing more confidence in, as well as when to start becoming much more cautious. We're going to take a look at two examples. We're going to look at the Dow on a daily chart, and then we're going to take a look at the Qs on an intraday chart. So up first is the Dow, which today broke short-term support to the downside right there, and then it quickly moved another 150 points lower after that break occurred at the 78.50 level. So that was an important level, and we broke down pretty good once that happened, but it didn't close beneath that support level, and instead it rallied back late in the day, and it finished above that 78.50 level. We closed at 79.32 today, and so that was a head fake move there, where we temporarily broke down and then turned around and reclaimed that level. And so when you're looking at a daily chart, the close is the most important thing. That's what you want to be paying a lot of attention to, so always watch that very carefully. And anytime that you see a breach of a key level like that, whether it's to the downside or to the upside, really, but price isn't able to hold above that level on a closing basis, then it's time to watch out. We saw that occur a couple of times in recent months on the upside of this range, where price was not able to hold above that level once it produced a breakout. And so each time that occurs, what we get is a retracement, and prices quickly reverse course, and that means you're in big trouble if you're a trader who went in the direction of the breakout, or in today's case, the breakdown. So what you want to do is, as soon as you recognize that, you want to tighten up your stops, or you at least want to lighten up on your position until you have more technical proof that the move that you're actually looking for is actually happening. And that way, if you're wrong, you don't end up taking near as big of a hit if you end up having to stop out. So today that would have been very helpful if you're looking to maybe short diamonds on a break right here, and then we turn and close back above it. There's your exit. It's time to bail out and regroup and wait for another setup to come along. Now let's take a look at the Qs on an intraday chart, and this is a 2-minute chart for the NASDAQ 100 ETF. This is QQQQ, and you cannot say that 3 times fast. So late in the day today, we had this pretty good sell-off move, and then we started basing here, where we're kind of hovering right at the lows of the session, and really it produced this very nice clean base, which usually points to continuation, but only when you're in a trending market, which we're very much not in a trading market right now. So what happened was today we saw lows get broken right here, and lots of traders just recognize this setup. A lot of people are familiar with it, and in a trending market we do tend to get some nice follow through from this kind of setup. So it's definitely one to be familiar with, but this is not a trending market, as I just mentioned, and that means that you've got to be very careful when trading this type of a play. So today, as that base got broken to the downside, what it ended up doing is head faking a lot of people who entered right there on that break. So all those sellers quickly recognized in the next couple of minutes that that breakdown was not going to stick. And so as price turned higher and upticked, those new entries right there quickly moved to correct that mistake that they just recognized, and that ended up sparking quite a short covering rally, really, for lack of a better phrase. It really just took the NASDAQ from the lows of the session all the way to the highs at the closing bell, and that was the biggest move of the day by far. So anytime that you find yourself in a range-bound market like this and you see that continuation setup right there, it doesn't mean that you can't play it. Go ahead and take it because it may produce a nice move, but you've got to be less trusting of that type of pattern whenever you find it in a range-bound market. And so what happens is if it doesn't immediately start to produce the move that you're looking for, meaning a good solid sell-off, then it's time to, again, start to lighten up and recognize the possibility that you may even need to bail out and possibly even flip that trade, because that certainly would have produced a very nice move today as well and offered a great opportunity in the process. All right, well, thanks for joining me, and don't forget to subscribe to the videos if you have not already. I'll see you soon with another video, but until then, trade like a bandit.